Eswar, what a pleasure to see you back in China.
Thank you for having me, and it's really a pleasure to be back here after 3.5 years and to reconnect with old friends.
Yeah, I know you are now only from the train station to the conference room, but what is your latest observation, this country where you actually have a very good knowledge of?
So certainly I see many good things happening in this country. It remains a very dynamic country, and China has certainly managed to accomplish a lot in terms of its economic progress. But this is also a difficult time in some ways. In the post-COVID reopening, I think there were some disruptions and the economy seemed to be on a good trajectory. But a lot of the data that we have seen coming in the last few weeks suggests that the recovery is not secure yet. And we've seen the government and the central bank reacting with some small policy measures. But there are some risks out there, especially related to the property market and a few other domestic risks. But it looks like the government is in a comfortable position that it can actually manage many of these risks.
Structural reforms, easier said than done, particularly when the global economy is becoming more unpredictable. So driving force like China's economy, how is it going to be? At what policies, at what degree, at what time? These are always the biggest questions. So compared to what is now, to the tool sets they had earlier, what is the likely assessment from you?
So the external environment is certainly not favorable at all to China. In the U.S., there is a probability of a recession sometime later this year.
Mild recession?
Perhaps a mild recession, and certainly so far the U.S. economy has held up remarkably well. The labor market remains strong. Inflation is coming down, although not to the extent the Federal Reserve wants. So we might see a little more monetary tightening, but certainly it's unlikely that the US economy will show very strong performance in the second half of this year. In Europe and Japan, there are fairly complicated economic circumstances. And then, of course, there are a variety of other risks related to geopolitical tensions, climate change, all of which means that China cannot really count on the rest of the world pulling it along. And now that China is the second largest economy in the world, I mean, it is a $19 trillion economy, the world is looking to China to pull it along. And for China to be able to accomplish its objectives of generating good growth, of course, a lot needs to be done here. You spoke about structural reforms. A number of reforms still need to be undertaken. In particular, the financial sector needs to be better at directing credit to the most productive parts of the economy. And that, I think, would be good for China's growth, but also the world growth, because if China grows in a stable way and generates more domestic demand, that's going to be good for the world at large.
That's about the Chinese economy. You have been doing tremendous research about the financial sector, especially about the currencies, and especially with the latest book, The Future of Currency. But really, my question is as simple as, is there a future of the real currency that we used to have on hand in our wallets?
It is a very interesting question, especially in the context of China, which of course gave birth to paper currency in the 7th century, and then the first fiat paper currency did emerge in China in the 13th century. So China has been very important in the story of paper currency. But I think the reality is that in China, in India, elsewhere in the world, physical currency, that is cash, is on its way out, because digital currency is just much easier, more convenient for consumers, businesses to use. For governments, it's much better because it brings a lot of economic activity out of the shadow economy into the formal economy. It reduces the use of money for illicit transactions. So I think the reality is that the future is going to be digital. But one interesting question at this stage is, what sort of digital money is going to be most important? Is it going to be official money issued by the central bank, that is central bank digital currencies, or is it going to be private monies like cryptocurrencies of various sorts?
Right. And we see the competition between them or among them, isn't it?
That's right. And as an economist, I think competition is a good thing. It forces the issuers of currency to exercise more discipline to make sure that the value of the currency can be maintained. But I think we're entering an interesting era of competition, at least in one of the forms in which money plays an important role. That is, as a medium of exchange for conducting transactions.
And this is, of course, related to a wonderful discussion about the future of currency, particularly the competition among currencies, even today. For example, the future of dollar. We all understand the dollar has been playing a role as a stable currency for the rest of the world, also for the U.S. economy as well. So we see some fear among policymakers about this, for example, in the U.S., but we also see some encouraging debates as a result of this elsewhere in the world about what will be the role of dollar and how much say others could have in currencies. So how do you see this debate, and especially related to the future of dollar?
This is a very interesting time in global finance because certainly there are many factors that should be reducing the importance of the dollar. The US political system has certain problems. If you look at the amount of debt issued by the US government, it's more than 125% of GDP. It's about $33 trillion. It's the highest level as a share of GDP, even higher than in the post-war period when the US issued a lot of debt. So the US dollar should be a lot weaker, but the reality is quite different. Certainly there are attempts by issuers of other currencies, including the Chinese renminbi, to get those currencies to be more important in international payments. Now that China has the cross-border interbank payment system, or CIPS, it can more directly communicate with the payment system, say, of India, Russia, Brazil, other emerging market currencies. So you can more directly trade between the Chinese renminbi and the Indian rupee, or the Chinese renminbi and the Brazilian real, without having to go to the dollar. But what is interesting is that a lot of this activity has pushed payments activity away from the euro, the Japanese yen, and the pound sterling, while the dollar still remains quite important. Similarly, as a reserve currency, the renminbi has started playing a more prominent role in international finance. It accounts for about 2.5% of global reserves. The dollar share has shrunk a little bit in the last 5 or 6 years, from about 62 to 59%, but the shares of the euro have shrunk even more. So the distance between the dollar and all the other currencies has, if anything, increased a little bit. So unfortunately, while I think much of the world would like to shift away from the dollar, it's not clear that there is an obvious alternative that can take the place of the dollar.
Of course, this is also a geopolitical story behind it, isn't it? If you look at what is going on and the latest conflicts, for example, in the Eurasian area, and how is it related to the financial sector. So how do you see countries voluntarily trying to come up with different options? Will they be able to figure out a path forward as they grope along the way to find the solutions? That's one issue, particularly related to the credibility of the US dollar.
There is a strong desire among many US rivals, but also many allies of the US, to shift away from a dollar-dominated global financial system. And as I mentioned, the improvement in domestic payment systems and the use of wholesale central bank digital currencies that will allow more efficient cross-border payments, that certainly has the potential to reduce the dollar's role. If you can get more quicker settlement of payments across borders, and you don't need a liquid currency like the dollar in order to conduct those transactions, and you don't need as much hedging. But the reality is that countries are going to have to develop their financial markets, and ultimately they have to make sure that they earn the trust of foreign investors. Now, despite all the flaws that the United States may have, the reality is that the institutional framework in the US still inspires the trust of foreign investors. And that's the key question for other currencies that want to compete with the dollar. Do they have the economic size, good macro policies, deep and liquid financial markets, and the institutional framework that will allow foreign investors to trust those currencies and those economies?
Meanwhile, how to avoid countries with probably the biggest reserve currencies in the world to use the currency as a currency weapon, quote unquote? That's also one question many have been thinking about. Do you see active discussions are taking place about that, particularly from the economy that are having the dominating currency, and how to make sure from their perspective, that the credibility of the currency still stay, and not just for 1 or 2 years, at least for a longer time. How much active is that discussion going on?
So in the US, there is a recognition that the primacy of the dollar does give the US some geopolitical power, but it's not all good for the US, because at times of difficulty, a lot of money flows into the US, and even in normal times, there is a lot of money flowing into the US that keeps the dollar at a relatively high level compared to other currencies, and that affects US export competitiveness. For instance, it's seen as affecting US job growth, in particular in the sectors that could potentially export a lot more to the rest of the world. So it's not a full positive for the US, but certainly in the US there are lots of discussions about how the high and rising level of debt might have negative effects on the dollar and of course on the US economy more broadly. But unfortunately right now there doesn't seem to be the political will to take the really difficult steps that are necessary to control the growth in the US fiscal deficit and therefore in the US federal debt. And given that the US still remains the largest economy in the world, the US to get its policies right is really important for the US but also for the rest of the world.
That's the last question I want to ask you, Professor Prasad, is the debt situation. With economies getting ever more threatened by the current challenges, sets of challenges you mentioned at the very beginning of our conversation, how are we going to see the debt issue can be more professionally and fairly dealt with worldwide?
This is a big concern for the world at large because there is a large group of economies that are really under enormous economic pressure. These are already relatively poor economies, so they don't have much room in terms of macroeconomic policies. They have large amounts of dollar-denominated debt or debt denominated in other currencies and just overall large amounts of external debt. So the key challenge really is for the world to come together. The global multilateral institutions like the IMF and the World Bank, the private creditors and major economic powers, including China, that has become a very important creditor in recent years. So we need to find a collective solution, and how best to share the pain seems to be the question at large. Every country, including China, has shown a strong willingness or at least a desire to move forward with debt resolution, but I think there remains significant differences in what the right approach to be to make sure that these countries get out of this problem and don't fall back into it, and also to see where they will get new financing so that they can start growing again. So it's a challenging issue, and I think it's going to require a very serious collective effort, with China in particular playing a very important role, I hope.
And also the United States and other G7 economies.
It's going to take a collective effort, yes, everybody is going to have to be involved.
Professor Prasad, what a pleasure to see you once again back in China and have an insightful conversation with you. Thank you so much.
It's been my pleasure. I really enjoyed our conversation. Thank you.
Thank you.